Okay, good evening, everybody. Welcome to this session. My name is Anne. Delighted to be here with you, both those of you that have attended live as well as those that are listening at home to a recording. Thank you so much for tuning in. So we're here. It's actually our first session back after the summer holidays. So I hope that you all had a really great break, enjoyed some of the good weather, etc. We are going to have a look this evening at task number 1 from the Financial Accounting Level 3 exam. And you will see that in our revision pack that we actually start each question with a little bit of a review of the topics covered within that task. So the first thing we do is tell you what the question's about. So task 1 is about day books. It's about non-current assets. 28 marks, gives you about 35 minutes to do it. We then have what we call a task briefing. So I'm not going to run through this because we've got plenty to do in the task itself. But this is really useful if you sort of think, I think I'm a bit out of touch with some of that stuff. I think it's been a little while since I looked at task 1 topics. Or maybe you're not a student of First Intuition, so you haven't had these summarised notes before. Please do make some time after this session to perhaps read through that task briefing and make sure you are familiar with everything mentioned here. Make sure you understand the accounting equation. Make sure you know what the books of prime entry are. Do you understand what the non-current asset register is for and what sort of details we expect to find in there? How do we deal with acquisitions and disposals? And what about depreciation and the different methods for recording it and so on? So do please work through that task briefing if all of that sounds like it's been a little while since you've seen any of it. Our plan for this evening is actually to get on with the task together. So we're going to do that with task number 1 here. And this is an example of what task 1 might look like in your assessment. So let's see how we go. It says this task is about recording information for non-current assets for a business called Wintersmith Co. So that's the company that we are dealing with. Wintersmith Co. has a financial year end of 31st of August and is registered for VAT. So one of the key things that I'm always looking for within this task is whether my business is VAT registered or not. This business is registered for VAT, which would mean if they buy an asset, the cost of that asset to them is the net price rather than the gross, because they will reclaim the VAT on all their purchases. If they sell something, they don't get to keep the gross proceeds. They'd have to pay the VAT over to HMRC. So when they sell an asset, they will only get to keep the net proceeds. So we've got to make sure that we include everything net within our records. So we want the net figures for both purchases, and if there are any sales, sales as well. So here we have a purchase invoice which has been received by Wintersmith. Well, that makes sense. They're the company that we're dealing with. They have purchased something. So let's look at the invoice. It comes from Pratchett. It comes to Wintersmith. Invoice number, date, etc. We've got some desks, chairs, tables, as well as some setup costs. So I can find all together. They add all this lot up to get to a net total. That's added on at 20%. To give a invoice total here. That's a net total as well as a gross total there. Wintersmith Co. paid the invoices in full in cash on the 1st of March XD6. Let's see what the invoice date was. 1st of March XD6. So it was like a cash purchase then, if you like, on the day that they got the invoice, the day that they actually bought and paid for the goods. Following information relates to the sale of a computer that's no longer required in the business. So it looks like during the period, not only have they had some acquisitions, and I might just annotate my question here because these are acquisitions. So things that have been purchased in the period. We've also got a disposal. A computer, we know the date of sale and we know the selling price excluding VAT. We've then got some general information. And there's a couple of things that I'm always looking for in any non-current asset question. Aside from the fact that I'm expecting them to tell me something about things that I've bought, and something about assets that I've sold, there's also two other things I'm particularly looking for. The first one being whether I'm VAT registered or not. And we've dealt with that. We've talked about that. We are VAT registered in this case. I'm then looking for information about depreciation policies. And there are three little sections here, all about depreciation policies. So this is the second big thing that I'm looking for. First one is whether I'm VAT registered. Second one is what do I do about depreciation? And it tells me fixtures and fittings should be depreciated at 25% reduce in balance, or sometimes called diminishing value. Computer equipment is depreciated over 3 years on a straight line basis with a residual value of 25% of cost. And a full year's depreciation is applied in the year of acquisition and none in the year of sale. So there's two different ways that you might be asked to do depreciation in questions in the assessment. One is this one, a full year when you buy something and nothing when you sell it. The second one would be pro rata depreciation, where you'd say, if I bought this thing after 4 months of the year had already passed, then I should only depreciate it for the other 8 because I only owned it for 8. So why would I depreciate it for a full year? I'll only depreciate it for 8 months. Well, here, this one is a full year when I buy it and nothing when I sell it. The idea being that things will even themselves out eventually. And then the other third thing that I might look for in this sort of question is any policy about capitalisation of expenditure. And it says here, any asset, this is referring to an individual asset, so any asset that costs £100 or more should be capitalised. So that means when I look through this invoice and I have a look at what I bought desks, £200 each. So yes, I need to capitalise those. Chairs, £100 each. Yep, so they also meet the criteria. Just said £100 or more. Well, that's exactly 100. And then tables are above the 100 threshold as well. So all of that can be capitalised. Now, what do you think about those setup costs? Paying somebody to come and actually set up these desks, tables and chairs for you. Do you think we're going to add that in? Are we going to capitalise that as well, do you think? You can let me know in the chat box. We are. Exactly. Well done, Sylvia. Yes, absolutely. And if you were a little bit unclear on that, remember you can go through the task briefing at some point. It will remind you about the rules here. But the idea is that we capitalise all the costs in bringing our asset to its present location and condition. And if these desks, chairs and tables are all flat packed, in order to get them to their current location, there might be a delivery cost, and their current condition, in this case, there's a setup cost. So I will capitalise that as well. Very good. So they're the things that I'm on the lookout for with a task 1 question. Number 1, am I VAT registered? Number 2, what's the depreciation policy? Number 3, does it tell me about the policy on what to capitalise and what not to? Remember, if you've got questions as we go along, you should just shout them out. So we have to complete the extract from the non-current asset register below, including acquisitions during the year. Year ends August X6th. Disposals during the year, also to August X6th. And then depreciation for that same year. It goes on to tell me not every cell will require an entry. So I've got a little, looks a bit like a spreadsheet, doesn't it, here to fill in. So not every cell is going to need an entry and not all cells will accept entries. Show your answers to 2 decimal places and use a day, month, year format for any dates. So I've got to be very careful I follow any question-specific instructions. In the live assessment, in some of these boxes, I would expect you to be using drop-down menus rather than having to actually type things in. We're going to write things in here because we haven't got any drop-down menu facilities, but you can use the AAT practice assessments as a great example of what your live assessment will feel like. The purpose of this one is not to simulate the live one in terms of the software, It's to check that our knowledge is good enough. So we're basically completing this non-current asset register for the year to August XD6. And I've got a heading, fixtures and fittings, and in that heading, I've got some chairs and tables from the year ended XD4. So it looks like I bought them in January of XD4, and in the end of that year, August, I depreciated them, and then I depreciated them again in XD5. So what's going to happen here in XD6? Well, probably guess, we're going to depreciate them again. What was the rule on depreciation of fixtures and fittings? Let's have a look. It said fixtures and fittings are depreciated at 25% reducing balance, also known as diminishing balance. So what do you think my depreciation should be then for this year? Any thoughts on that? I'm going to set you to work tonight. How much depreciation should I be putting in? Remember, to 2 decimal places, so pounds and pence. It's my depreciation for the year. Well done. Absolutely. You need to take the carrying amount. It's a diminishing value or a reducing balance basis. So you take that carrying amount and you multiply it by 25%, which gives me £1,068.75 of depreciation. And when I deduct that from the carrying amount I had before, it leaves me with an asset value of £3,206.25. I'll make sure that I send over this annotated answer to you as well. Great. So that gets us up to the end of August XD6 in terms of this subheading, which was the chairs and the tables. But of course, I've bought more things in this period. The chairs and tables are fine, but what else did I buy? Remember the invoice? Desk, chairs and tables, including the setup costs, cost me £2,425. Remember we talked about the net figure being the relevant one because that VAT will be reclaimed from HMRC. So even though I might have paid it for now, I will get it back. So I'm going to have to make another little section here to collect my desks, tables and chairs. So this would be from a drop-down menu in the exam. But there would be something descriptive enough so you knew what you were doing. Desk, chairs, table. And the acquisition date of those, looking at the invoice, 1st of March, XD6. We know that's also the day it was paid. We're going to follow the format the question suggested for dates, which was day, month, and then year. The amount is 2,425 net of VAT. So that can go in there. And how did we pay for it? Well, your options are cash or credit. This was paid on the same day that we bought it, so it was cash. Now, got to be a little bit careful here because the meaning of credit in this scenario doesn't mean that you buy it and they say you can pay 14 days later. The meaning of credit in this scenario means you have effectively financed it. So you've taken out a hire purchase agreement or you've taken out a bank loan and you're paying for it over 36 months. That's the meaning of credit in this scenario. If they just say, we'll give you 30 days credit, you would treat that as a cash purchase. Credit means some sort of consumer finance or bank loan, that sort of thing. So the 2,425 is in there now. So what do I need to do next? Any thoughts on what needs to go in this row underneath? Thinking about how we dealt with the other chairs and tables. What do I now need to do with this purchase price? What's going to happen in that empty row? Any thoughts? Exactly. Well done. We need to depreciate it, don't we? We are going to have to depreciate in the year, which we're currently in. which is August of X6. And our depreciation is 25% reducing balance, as we've already discussed. But we're in the first period, so it's just 25% of the cost figure here. And we do, if you remember, depreciate a full year when we buy something. And it's only in the year where we sell it where we don't do any depreciation at all. So we can update that one and find its carrying value there. Fantastic. So that one's now done. So that first one involved depreciation on existing assets, as well as adding in the new asset and depreciating it. The next thing that we come to, and it's a little green bits I'm filling in here, is a computer. And that computer is GWX11. Now, I don't remember something about a computer being sold, so let's check if it's the same one. The following information relates to the sale of a computer. It's a GWX11. So it's that one, and it's sold. It was sold on the 5th of May of 20X6, and it was sold for $3,500 excluding VAT. Remember the rule on VAT? We only include the net figures, the net purchases, the net sales. So when I look at my computer here, in the year ended August X6, in these last columns, it says, what are the disposal proceeds? Well, I say we sold it for $3,500. And what date did we sell it? Well, that was the 5th of May of X6. So I pick all of that up from the question. Now, what did we say about the depreciation policy? It's a full year when we buy something, and there is no depreciation in the year where you sell. So in the year of sale, there was no depreciation. The idea is that it balances out. So you buy something, you depreciate a whole year, you sell it, you don't depreciate it at all. And what's its value at the end of the year? Well, you might be tempted to put 4,000 in there because you think, well, it had a carrying value of 4. I've just depreciated it by nothing, so it's still worth 4. It's not yours. Its value to you is now 0. You have sold it, so it's gone. So don't be tripped up there. Make sure you include a nil value at the end of the period. This asset is no longer yours. It has been sold. The carrying value for you is 0. All right. The next one is a server. The server was purchased in X5. It's got 1 year of depreciation so far. We've got more depreciation still to do. What do we know about depreciation of the server? We can only depreciate things if we know the policy. We've depreciated some fixtures and fittings. That was fine. The computer equipment is depreciated over 3 years on a straight line basis, assuming a residual value of 25% of the original cost. What does it mean if I have a straight line basis? What does a straight line basis mean to you? How do I find the depreciation amount each year? Remember, this is where the task briefing can come in. If you feel a little bit unsure about my questions, task briefing will be very helpful in reminding you how to calculate the different types of depreciation. But one of the features of straight line depreciation, also known as depreciation on cost, is that it is the same amount every year. So in this particular case, we don't really need to do this, but just as a little extra, the cost of the server was £2,700. We're told there will be a residual value, which means this is what it will be worth at the point we come to sell it, 25% of whatever the original cost is. Let's work that out. So we're expecting it to be worth 675 at the end of its life. which means over its life, its value's got to go from 2,700, which is what I bought it for, down to 675. So we're looking at a reduction in value of 2,025. And thank you for that, Rachel. Yes, you're absolutely right. Straight line means that the value is relative to the original cost, not the carrying value. Absolutely. And this calculation I'm showing you here isn't actually needed in this case. I'm just doing it as a reminder of how to calculate straight line depreciation. So you take cost minus residual value, or the expected residual value. It gives you a reduction in value estimated over the life of the asset. And then you say, well, how long is its life? How long am I depreciating for? And the answer here was 3 years. So 2025 shared over 3 years is 675 each year. So that's how it was calculated by whoever wrote this question. As far as you're concerned, you didn't really need to do that working. Why? Because you know that depreciation on cost means depreciation is the same every year. Straight line depreciation means the same amount of depreciation each year. So you could have just looked at last year and said, oh, it's straight line, so it's the same. And that would have saved us a little bit of time. But because it's a revision session, I thought, let me show you how to calculate it, just in case you need to calculate it in future. That's our final asset, the server, which now has a residual carrying value there of 1,350. So well done. We've now completed that part of the question. So we dealt with the acquisitions, we dealt with the disposals, we dealt with the depreciation. So in effect, 3 different bits of the question. We now go on to have a look at some other things. But before we do that, does anybody have any questions on what we've done so far? If there's anything that's not clear, please let me know. Otherwise, we'll just keep going. So some questions about what we've calculated then, really. It says Wintersmith Co. made a gain or a loss of how much money on the disposal of the computer? Well, how do we know if we've made a profit or not? A profit is a gain. A loss means, of course, we sold it for less than it was worth. So I think a good starting point to see if we've made a gain or a loss is to find the carrying value. The carrying value simply means the value of this asset in our books. So the carrying value at the point of sale was what? Let's have a look. Find the GWX11. There it is. Bought it for 8,000. We depreciated it by 2. It became worth 6. Depreciated by another 2. It became worth 4. So it's sitting in my books at a value of £4,000. When we sell it, remember it's got to be VAT exclusive because the VAT part doesn't belong to us. We sell it for 3,500. So there is a difference there of £500. What do you think that is? Would you call that a gain or a loss? It's a loss, isn't it? Well done. Thank you. Yeah, absolutely. And I think by laying it out like that, it becomes quite clear. You've sold it for less than it was worth. I put the phone on its do not disturb mode, but it clearly didn't work very well. I don't know what else to do about it, really. Okay, well, hopefully it's going to be all right now. Okay. So carrying value at the point of sale, selling price 3,500, as you correctly said, a loss of £500. So that part's now done. Part E. Crivens and Sons is not VAT registered. They purchased a company car on the 1st of April '89. So now this is a completely different company. Oh, you've got a question. Let me go back to that. Handa, would Would the previous task be different if there was a part exchange included, or would it be treated too as a disposal? The task would be similar in a lot of respects. If that computer equipment had been part exchanged, the disposal, if you like, of the old computer equipment, if its part exchange value was 3,500, that part I would still enter in there. I'd still work out that there was a loss on sale of 500. It was worth 4,000. I part exchanged it for 3,500. I still lost £500 on it. So that part would all remain exactly the same. However, if I'd part exchanged the old computer against a new one, I would then have another addition. I'd have my new computer to add in. So I'd have to have another little section where I added in the new computer equipment, which might come in here. And the cost of the new computer equipment would be made up of the value of the part exchange. So let's say they give me 3,500 part exchange value. And this is not part of this task, of course, so don't get confused. But let's say, for example, they gave me £300 value as the part exchange. Then they asked me to pay another 1,300 in cash. In that case, the value of my asset would be 4,800. And I'd add that in and I'd depreciate that in the normal way. So largely the same, but not quite. Is that all right, Amanda? Does that make that a little clearer for you? Yeah, lovely. Okay. So we can fill this in then. Didn't bother with that part, did I, before? But loss of 500. Then I just got on to telling you Crivens and Sons is not VAT registered. So this is a completely different company. They purchased this company car on the 1st of April XD0, costing £12,000 plus VAT. And they pay for it with an electronic bank transfer. What cost is recorded in the asset register? Any thoughts on that? What cost will be recorded in our asset register for this car? How much is it costing the company? They are not VAT registered. Oh, brilliant. Absolutely. It's the price plus the VAT. So £12,000 is without the VAT. I need to add 20% on top of that. So I don't mind how you do this on the calculator. You can literally type in 12,000 plus 20 and then your percent button. Or you can go 12,000 multiplied by 1.2. You're going to get exactly the same answer. You're just adding on 20%. So 14,400 is the cost of the car, not VAT registered, can't reclaim that. So we need the full cost in our accounts. Now, thinking about this car a little bit further, the car is assumed to have a residual value of £5,000. Find the highlighter here. And a useful economic life of 4 years. Depreciation is prorated for every full month that the car is owned. Now, I like this question as a revision question because we did the first question where we said depreciate full year when you buy it, nothing when you sell it. Well, guess what? Depreciation here is different. Depreciation is only for the months that we own it. So if I only own it for 2 months in the year, I only depreciate it for 2 months in the year. Complete the journal to account for the car's depreciation in the year ended December XD0. Enter your answer to 2 decimal places. We've got a little pick list as well for our account headings. Let's start with the numbers. So if I had a little timeline, my year end is December of XD0. So my year started of January in XD0. And I bought this car somewhere here in April. And I only want to depreciate it for the months that I actually own it. So what do you think? From April through to December, how many months is that? 9. Perfect. So I'm only going to depreciate it for 9 months then, because I've only owned it for 9 months. My depreciation policy, it says, assumes we have a residual value of £5,000 and a life of 4 years. Let's put our working up here. So the cost of the car is 14,400. At the end of its life, it's going to be worth 5,000. That's its residual value. So its value will fall to 5,000, which means I'm expecting a fall in value of 9,400 altogether. 14,400 down to 5. It's got to be 9,400 fall in value over its entire life. And its life is going to be 4 years. So we divide that by 4. And it tells us how much it will fall in value every year. So my depreciation is 2,350 per annum. But I don't want a full year of depreciation, do I? Because I didn't own it for a full year. So I have to go the extra step and say, I actually only want 9 months of that though. Next year is fine. Next year I can do a full year. But this year, just 9 months, thank you. So we can work out our depreciation to be £1,762.50. And that is therefore the amount that's going to go into my double entry. The next question is just going to be, what do I debit and what do I credit? So the amount is 1,762.50 from up there. So when we put through depreciation, we need to create our expense. Anybody got any ideas what the double entry is going to be? How do we create our depreciation journal here? Do you remember the double entry for depreciation? Excellent. Well done. So the debit is to depreciation expense. If you remember dead click, which is what we use to do our debits and credits, we say debits are increases in expenses, assets and drawings. Well, this is an expense. An increase in an expense is a debit. And you wanted to credit the accumulated depreciation. Exactly right. So the motor vehicle accumulated depreciation, that's just a measure of depreciation on this vehicle so far. And that accumulated depreciation really is reducing the value of our asset, because the car's now worth less because we've used it for a whole year, so we have to depreciate it. So increase the expense, decrease the asset. There we go. That's our journal done there. Well done. So what next? Got a few true and false statements just to finish off. If a business is using the non-current asset register function in their account software, the depreciation may be calculated and posted automatically. Does anybody use an accounting software package? Do you know whether they deal with depreciation for us? What do you think the most likely answer is to that? Do you think the accounting software is capable of working out some depreciation? I think it is. Of course, it's there to make our life easier. So if it will calculate the depreciation and post it for us, then of course, that's why you'd actually subscribe for that package in the first place. So I would also go with true there. Anything the software can do to help us, it is likely to be programmed to do. And what we'd need to do is to tell the software what our depreciation policy is. So if we want to use reducing balance, tell it that. If we want to use straight line, tell it that. Tell it the length of time you're going to own the asset, tell it the residual value. It will basically do the calculations we did longhand here. So we worked all that out manually. The software would do that for us and it would post it. If a business is using the non-current asset register function in their account software, no further checks will need to be performed. What do you think? Are we going to put 100% trust in our software? It's false, isn't it? Yep. We should do some checks. The sorts of things that we might do might be to, I don't know, let's say, double check a depreciation calculation, because the software will only calculate the depreciation based on the rules that we've put in there. So we could just test check depreciation. We could test check a carrying value. We could test check that the asset still exists. So it says that we have, for example, just purchased these desks, chairs and tables. So where are they? Can I see them? Can I count them? So that would be another good check, a test of actual existence. Have they actually been delivered here? And then finally, if a business is using a separate non-current asset register, such as a spreadsheet, so if this was a spreadsheet rather than part of an integrated package, a journal will need to be posted in the account software to manually enter the depreciation charge. What do you think about that one? If you've got a separate spreadsheet, do you think you have to do a journal to put your depreciation in? You do, don't you? It's only the automatic software package that would do it for you. If you are just dealing with a manual spreadsheet, you would have to post the depreciation yourself. Excellent. There we have it. So that is a task number 1. I hope that you found that session helpful. Each week, you'll run through a different task. So next week, if you'd like to come along, it will be task number 2. And task number 2 is going to be all about accruals and prepayments, sort of like period end adjustments. So accruals and prepayments and inventory and doubtful debts, all those sorts of things come up in a task number 2. So I'd suggest perhaps now we've finished this session, you go away and you practice some more task 1 questions or revise that topic if you found it particularly tricky, and then join us again next week for task number 2 if you'd like to. You're welcome to work ahead and actually have a go at the example yourself in advance, and then you can just listen and see how well you did in the next session. I'll leave that with you. So thank you very much for attending. I'm going to stop the recording, and then if you've got any individual questions, I'd be happy to help.